going on, guys? Welcome to another episode here at Holy Perspective Trading. Today's Sunday. What a beautiful day to just be mindful of Jesus Christ and the sacrifice that He made for us. That fact that He was unjustly executed on our behalf for our transgressions. Let us be mindful of that. I'm gonna take off my glasses because of the glare, but yeah, let us be mindful of what our Savior did for us today and this week moving forward, and just the wonderful sacrifice and the salvation that comes because of that, and the fact that He so willingly gave Himself up on the cross for us, and that through Him we can have life and come to know truth. That being said, today's Sunday, 29th of March, we are going to be doing a charting session on power of 3 hourly manipulations, so that you guys can get a little bit better understanding of how I trade and how I view the markets really. And so we are going to go through a couple examples, maybe 3, 4 of them. I think one of them is playing out right now as we speak, so it would be perfect if it does. My draw on liquidity is going to be down here, the low of the what was it, 8 to 9 p.m. candle. So we'll see if it plays out. And then we'll come back to it. We might come back to it. I have a cool indicator on the right hand side. It's called ICT HTF candles, stands for higher time frame candles. So if you want to check it out, check it out. But it basically prints the whatever time frames you choose. I chose the 15-minute, 1 hour candle on the 1 minute chart, so you don't have to keep switching back and forth. But basically, let's switch over to the 1 hour time frame so we can get a better, I guess, overview of what I want to talk to you guys about. The way that I trade, guys, is always looking at hourly candles, right? So we have here 3 hourly candles. This is the 6 to 7 p.m., 7 to 8 p.m., 8 to 9 p.m., and then now 9 to 10 p.m. candle. So I look at hourly candles to get my bias. And I also look at how far price is trading from the open price, from the previous candle's low and high, etc. Why is that important? Because we can see that in an hourly context, you have wicks, right, above the open price and wicks below the open price. So basically, these wicks here being formed are going to be created sometime within the hour. So the way that I try to trade is I like to position myself. Sorry, go back. I like to position myself in a way that I'm entering somewhere along the lines of this move to the upside to catch the down move back to the open price or to the previous candle's low. Or I could be positioning myself, if it's a bearish candle, I'm looking at the open price. When price trades below it, I'll position myself down here to try to catch the up move back to the upside. Okay, so it's kind of the way I'm looking at it. Basically, power of 3 explains that price opens or accumulates, and then price will manipulate to one direction. And this is what we would consider the fake move, right? First move is always the fake move, is a way I like to put it. And then we will come back down, trade below the open price, and this will be the real move for that hour, right? Real. Please excuse my drawing here. Real move. Okay. So you can position yourself, at least the way I like to play it is you can position yourself in one of 2 areas. Let's see what color I used. Blue. Do I have black? I don't think so. I'll use pink. You can try to catch some sort of inversion or PD array in the down move here towards a internal liquidity, or you can keep an eye out to see how price trades at the open price to see if we hold it. Once we break below it, come back up, test it, and then catch the move to the downside. So without further ado, I will show you guys with an example from today. And so this played out beautifully. I couldn't catch this trade. Unfortunately, I was doing some yard work at the time, so uh, I couldn't catch the trade, but it still plays out beautifully. So I will show you guys what I mean. So looking at the 7 to 8 p.m. candle here, I'll drop down to the 1 minute. I'm gonna mark out the low of the 7 to 8 p.m. candle, and I'm gonna make it another color just so it stands out here. So we'll go, let's just do red for sake of visibility. All right, here we go. So you guys can see what I'm talking about. I'm gonna come back and we'll go into replay mode and we'll go here. Okay. And this is the way I like to trade, guys. So we can see the 7 to 8 p.m. candle is closing. It is about 7:57 p.m. And so I know that a new hourly candle is about to open in 3 minutes. So this is the best time to catch a trade, in my opinion, because you're taking advantage of that macro with the hourly open and any manipulations for a quick scalp to the downside. And so we're looking at power of 3. You could see price is just kind of manipulating. And so when the new hourly open candle happens, you might get, if you're blessed, manipulation to the upside, and then you can catch the down move to the most recent low, which is formed right here. So that's what I am looking for. Now let's keep going and you'll see exactly what happens with the hourly open. I want this low to stay intact, so we're gonna go next hourly open candle. Boom. All right, 7:59, and then we'll see what the 8 p.m. candle does, and then boom. Okay, look at what happened, guys. This is a beautiful example. The hourly candle opened, it went up, right? We can see this wick here, and then it flipped below its open price, and now it closed as a bearish candle, right? It closed as a bearish candle right here. So in 1 minute, that manipulation happened. And a lot of times ICT traders, they're trying to catch a whole move or external liquidity or some crazy low, but keep in mind, guys, these manipulations can happen in minutes, and in fact, these are the best trades for me. So going back to the before the hourly open, I would already be thinking about where am I going to position myself, right? So if I'm here and I want to target the most recent low, which is this low here, I'm going to be thinking about, okay, the 8 p.m. candle is going to open. It's going to open with momentum. So where am I going to position myself? Well, looking at price right now, I like that this candle here, I'm going to treat that as an order block because it's the last up close candle before a down move. So I'm going to set a limit order right here. Sell. Okay. Now let's see if I get picked up in the new hourly open. Boom. I don't get picked up, unfortunately. See, this would be possibly a scenario where I missed my trade. Okay. And that's it. I don't get picked up, but the hourly candle did exactly what I wanted it to. Okay. So price opened up, went higher. Whoops. Did not mean to do that. I don't know why I did that. Price opened up, went higher, came back down below its open price, and then took out the most recent low to my left side from the previously hour candle. So if I would have gotten tapped in, which I didn't, let's look at the ruler. I would have got around 33 points. Okay. This is just one example, and you can see as we click through the hour, look what happens. Price again now flipped above its open price. So it's actually pretty cool what happened. If we go down to the 1 minute time frame, we filled the gap. So between the session on Friday and Monday open, you can see here there's a big gap between basically this empty space. And we're gonna look to our left here exactly what happened. So we came up, we filled the gap perfectly. Whoops. We went up to that gap, and then you're gonna see we sell off almost immediately. Come back down. Okay. Wonderful. All right. I'm gonna get out of this position. Show you guys an example. Let's see if the trade I was looking at played out. All right, so we'll look at another example, guys, so you guys can get kind of an idea of how this all works out. So we're gonna look at the 9 to 10 a.m. open here. Let's go back, see if we can find. There we go. All right, wonderful. Not the best example because the 10 a.m. open took out the draw immediately, so it does paint the picture here, guys. So the 10 a.m. open, if we were to let's say go back to replay mode. All right. So here is the 1 hour candle. It's very bearish. So how I get my bias is depending on how the previous hourly candle, if you get a strong close, either bullish or bearish, so long as that body is thick and you have a down wick or up wick to scalp, that's all I need. In this case, the low was put in at 958. So the fact that we're trading so close to it means that it could get taken out in the next open. And that's exactly what happens here. So you see the hourly candle right here. It opened. It came down, took out the most recent low, flipped above its open price, and then closed. And due to that happening, I don't have a trade anymore because the most recent low or high it has been taken. I don't want to predict what the hourly candle is going to do, especially since the last hourly candle was so bearish to the downside. I'm not going to predict that this is going to be an hourly reversal to the upside, especially with fair value gaps and all that stuff. But that's actually what ends up happening here. So we'll leave replay mode. And then we'll come back and then we'll go replay mode again all the way, start new, all the way here. Actually, here. There we go. Okay. So this actually worked out beautifully. We're going to mark out the high of this candle and we're going to mark out the open of the new hour. Okay. So in an hourly context, this is exactly what I'm seeing. Okay. So price did the following. Price, I'm going to go green. Opened up. Price traded below its open. Flipped back above its open price. Created a nice upwick, came back down, and then closed right here. So what am I trying to do? The next hourly open, I know it's more than likely going to open, manipulate to the downside, flip above its open price, and then I'll be able to target the high of the most recent, that was most recently made, of the most recent hourly candle. And so that's exactly what I'm trying to do here, guys. So that being said, let's flip back down. And guys, I'm giving y'all a lot of free sauce. Okay, and this doesn't even go into like 50-60% of what of how I take these trades, but at least it gives you guys a good idea of how I look at the markets and maybe something you can implement in your own trading. So here we go. So we're looking at, go back to right before the open of the new hour. So we see we have a bullish candle, excuse me. And it's not so, we can go 1 minute further. It's not so decisive, I don't like the wicks on both sides, so this is not the best example, but I think it could still work out. Um, so what am I thinking here? Well, I have two options. I could either scalp the most recent high that was created, right? This is the way that I think about it. I could either scalp the most recent high that was created right here with the momentum of the hourly open, or I can hold up until this hourly high that was created at 10:20 a.m. Now, the most recent high has more odds of getting hit. This high could get hit, could not get hit. You could do a TP1, TP2 type thing, whatever. But because the last hourly candle closed bullish, my bias for the next hour, at least for that scalp, is going to be bullish. I'm not going to target lower liquidity. I'm going to target the liquidity up here. So what am I going to do? I'm looking at structure here and I'm thinking, where can I enter that makes sense? Now, price is here. I know when there's an open, there is some momentum. So what I would do, in all honesty, I'm looking at structure right now and I see this nice breaker block right here. Okay. Why is this a breaker block? Right here. Why is this a breaker block? Because you see price traded below, broke above it, and now we're kind of holding this area, right? We're holding this level. So I'm going to use it as kind of a trampoline to go back up to the upside. So I'm going to set my limit order right at that breaker. So I'm going to mark it out again with a line. Boom. And I'm going to set a buy order here. Buy. Okay. If I don't get filled, I don't get filled. I missed the trade, but at least the framework will work. So price will open. It wicked both sides. Okay. And look at this. The hourly candle is arguably manipulated to both sides right there. It's still undecisive. Then it comes down. It's a bearish candle. Goes back up. Goes up. Okay. It takes out that high. I'm still not in the trade. It created equal highs basically there. Okay. Created equal highs. Do we get picked up? Okay, I'm picked up here. Now, because I'm picked up, what am I going to do? This high is still intact, right? This high up here is still intact. So I'm going to target that high in a 1-to-1. Now, let's look at what happened within that hourly macro because that's super important to understand, guys. So where is the open? Here is the open price of the 11 a.m. candle. Price just opened, went higher, took out this resting liquidity, which is an internal high right here, and then rejected very hard off of that level. So we came back down, flipped above its open price. So we flipped above the open price level here. And so now what I'm expecting is price to come down, again, manipulate, trade above. I'm hoping to trade above its open price, hold to go higher and take out that most recent high up here. Now, given the momentum, I am pretty confident in this trade because I've seen this happen so much that I'm just pretty confident. I would get in this trade and not think about it twice. Okay, so I'm gonna set my TP here since that high is still intact. And then at a 1-to-1, obviously I wouldn't enter the full size. I would enter with micros, but look, beautiful. So I got my stop loss at the most recent low. So let's see what happens. Confirm, and then we'll let this play out. Comes down, draw down and then boom, take out my profit target in one candle, which is extremely crazy. And yeah, this happens all day. I'll show you guys one more example where you can scalp the hourly highs or lows for that matter. This would be another good example right here. We're going to go back to the hourly. And this happens pre-market. It happens at New York. You name it. Okay. Um, it looks like it happened back to back. This is the 4 to 5 a.m. candle. And again, I'm showing you guys this so that you can see that this is tradable in multiple time frames. That is not just during New York session. It's just using power of 3 manipulations to your advantage, and to to take advantage of the momentum for those hourly opens. Now, I'm looking at structure. It's very bearish. We've been trading. We're in a downtrend, right? So I am bearish here. I have this low that is of interest, which is right here, the most recent low. And we are at 559. Okay, so at 559, I'm looking for price to manipulate to the upside, and I want to catch a quick move down. So I'm looking at how many points away I am. Price just closed here. I'm about 18 points away. So I think I'm gonna get a more aggressive entry here. I'll place my limit order up here. So I'm gonna put a limit order, boom, and then we'll see what price does when it opens up. Oh, stop. I didn't mean to go so fast. So let's go back a little bit. Actually, that's fine. So price opened right here at 6 a.m. Zoom in a little bit. 6 a.m. price opened. We can see that price came down. Did not, this low still intact, so this is still a valid trade for me. Price flipped above its open price. Now this happens a lot. I love when this happens, when price flips above its open price, because there tends to be a lot of resistance. And then typically I know that when price flips above its open so early, this is a manipulation move. So I have the bias of the previous hourly candle to tell me we are going to go down. My TP is going to be at that low, and then my stop loss is going to be at a 1-to-1. So matter of fact, I wouldn't even risk a 1-to-1 here. I'd probably have my TP and stop loss like that. So if you can't see it due to it being blurry, so 700 USD at this high, and then my target is going to be 930. All right, so I'm confirming my trade, and then we'll see what happens. Now look at the hourly candle, guys. We are now, it's a bullish hourly candle, but I have the macro of this hourly candle, and I have the macro of the previous one that tells me we are in a down move. So this open high here, it's only 6:07 p.m. We still have 53 minutes for price to reverse and go down. And so I am predicting this is going to be a manipulation. So price comes down. Look at the hourly candle to the right here. What's going to happen? Price comes down. Boom. All right. This is a key level, a key moment. Price just flipped and it's trading at its open price. If we can break the open price, test it, hold it, more than likely we're going to flood down and we're going to take out the most recent low. So that's what I'm looking at. We're going to go next. Price hesitating a little bit, comes down. Okay, now we got some momentum. At this point, I'd probably be break even, and I'd be looking at ES to see if it takes the low, if there's an SMT there, but I can't go break even in replay mode, I think. So I'll just manually close. We trade above the open price. And then I think we're about to catch some momentum. Now pay attention to this, guys. Exactly what I said happened. So we trade below this open. Boom. Come back up, test it, and then we hold that open price. Now price is going down again. So we can see that opening price level for hourly candles is super, super important. Coming down, we test the open again, and I think that will be the last time we test it before we hit our target. And we're almost there. Price chopping around, boom. And now keep in mind, this is pre-market, so price doesn't always move as fluid as New York, but you get the picture, okay? So what did we do? Okay, price, once again, we'll go red candle. Price over here, opened up, traded up. Now, this trade up is going to be our, how do I do highlighter? There's a way to do highlighter on this, and I forget how to do it. Anyway, this move to the upside was our manipulation, guys. Price then came back down, tested the open price right here. We can see this level is our open price. Came down again, tested it again, came down again, tested it again, and then finally we came down and hit our target. So you can see two things. One, the manipulation leg, I'm just going to do MANI, right, was to the upside. And two, you can see the importance of those open price levels here. Whatever direction holds after the manipulation will be more than likely the move for that hour. So that's it. And so this is the way I like to trade. I go for hourly scalps. This is just a little bit, there's a lot that goes behind the scenes in regards to timing and what PD rays I use and risk management and all of that. But if you care to know more about the trading, how I do it, leave a comment below. This video is already pretty long as it is, but someone requested a charting session, so here it is. Hope you enjoy. Join up on the free Discord for more tips and tricks, more trade recaps. And until next time, God bless y'all. This is Kevin. Peace.